Hey everybody, today on 5 Minutes of Finance, we will complete the loan estimate's third and final page. Okay, on the third page, at the very top, left-hand side, it has the lender's name, in which case today it is Ficus Bank. Underneath, it has the NMLS number, license ID, loan officer, Joe Smith, his NMLS license ID, because the company has a license number and the loan officer has an individual license number as well. Then we have the email, joesmith@ficusbank.com, and the phone number. Underneath, we have comparisons. Now, this area right here is, well, it's super important. It's the reality of taking out a large sum of money over a long period of time. But when you think about it, where are you going to get somebody to lend you $100,000, $500,000? California, we're talking $750,000, $1 million, $2 million, $3 million for 30 years. It's fantastic. It's a great way to, well, hey, let's be honest. It's the only way that you're going to get this kind of money, unless you're financially well off, you got a rich uncle or aunt, which most of us do not. Comparisons. In 5 years on this loan, which, if I remember correctly, is $162,000. We look on the front page, the very first page of the estimate. Loan amount is $162,000 at a rate of 3.875. It says total you will have paid in principal, interest, mortgage insurance, and loan cost is $56,582. Again, unless you have cash money, you're going to pay these costs. And most of us don't mind paying it because you get to pay it low and slow. Now, here's the great thing about the real estate that you are purchasing. It's going to increase in value. By the time you get to that 30-year mark, more than likely, this property is going to be well over $162,000. Okay? Usually, we see that price double. Let's be honest. Look at your parents' house. How much did they pay for it when they purchased it 20, 30, 40 years ago? And how much is it worth today? That's a good indicator of where you're going with this. So, honestly, I wouldn't put too much into that, too much thought into, oh my gosh, I'm paying so much. No, you're not. Especially when you're at 3.875, I can tell you, in my lifetime alone, back in the 80s, the prices were well over 12%, 15%. And I think they peaked right at about 18%. So that low 3.875 is nothing in comparison. It's almost free. This is just an example, but these prices and better are available now. I urge you to take advantage of it. But back to the example here. Total you will have paid in principal, interest, mortgage insurance, and loan costs is $56,582 in the first 5 years, okay? Now, underneath that, it breaks out the principal only that you will have paid off, because that's what we really want to know. That's what we want to get into. So of that $162,000 in 5 years, I will have only paid off $15,773. That's how we get 30 years drawn out. Absolutely. Now, in the first few years of the loan is when you pay the least. as time goes on, because there is less principal for the interest to be calculated on, you speed up and you pay off more of the principal. We're going to get into amortization in another video. Maybe we'll do it next week, okay? But 5 years, that's how much you will have paid off. Annual percentage rate. Now remember, your annual percentage rate is not your interest rate. The annual percentage rate includes the other cost. Okay? Your cost over the long term expressed as a rate. And it says it right there. This is not your interest rate. And this is reflected on this example as 4.274. The total amount of interest that you will pay over the loan term as a percentage of your loan amount. 70%. Oh my gosh. 69.45% is interest. Who gets that? The person that's giving you the hundreds of thousands of dollars. The bank. Yes, they're getting paid. You better believe it. And like I say, the only way to get around that is to come in with cash money, or maybe you can open up your own bank. I don't know. Other considerations. Appraisal. It states here that the lender, it says, may order an appraisal to determine the property's value. The reason why they say that, in some cases, you get an appraisal waiver. Assumption. Is your loan assumable? It says, if you sell or transfer this property to another person, we, first line says, will allow, under certain conditions, this person to assume this loan on the original terms. Typically, and I honestly have never seen that box checked, underneath, it almost always says, will not allow assumption of this loan on the original terms. Homeowners insurance. This loan requires homeowners insurance on the property, which you may obtain from a company of your choice that we find acceptable. One thing I want you to not confuse this with is mortgage insurance. Homeowners insurance, that really does protect you. Mortgage insurance protects the lender in the event that you default. Late payment. Underneath homeowners insurance, if your payment is more than 15 days late, we will charge you a late fee of 5% of the monthly principal and interest payment. Refinance. Refinancing this loan will depend on your future financial situation, the property value, and market conditions. You may not be able to refinance this loan. Under what conditions? Well, property goes through cycles. And you may be in a cycle where there is a retraction, okay, instead of the expansion. Refinancing this loan will depend on your future financial situation, the property value, and market conditions. You may not be able to refinance. Why wouldn't I be able to refinance? Well, if any one of these is not in good order, let's say, for instance, your future financial condition, you may lose a job. Your credit may go down. Maybe you're over leveraged. Maybe you have 4 cars and 18 credit card bills and let's say furniture bills. Okay, well, now your DTI is up. Well, that's your financial situation. Your DTI, your debt to income ratio, may be too high. The property value, what if the property value goes down? Real estate goes through cycles. And if you're in a cycle where the property values have decreased, well, yeah, they'll bounce back. They typically do, but if you're in that cycle, you may not be able to appraise for the value that you need in order to get that loan. Those are just a few of the reasons why. Servicing. We intend, it says, first box, to service your loan. If so, you will make your payments to us, meaning the lender, or transfer servicing of your loan. Now, typically, you'll get this with a letter in the mail from the lender saying that we have sold your loan and future payments starting at on this date will be made to this company, and they will contact you to let you know what you need to do. That's all it is. Confirm receipt. By signing, you are confirming that you have received this form. You do not have to accept this loan because you have signed or received this form. It's not what it means. Confirm that you have received it. When you sign it, you date it. This form, this LE, needs to be out to you within 3 days of you submitting that application. That's the purpose of that. That's all there is for 5 minutes of finance in 20 minutes. There are a lot of things that we could spend more time on, but for the sake of time, that's all we're going to do here. Okay? I hope you've enjoyed it. If you have any questions, remember, you can always reach out to us at loans@rgmfinance.com. Or you can call us 1-800-940-0331. Thank you. That's it for 5 minutes of finance this week, and we'll see you next Friday.